Hello folks, this is Jesse Kovacs from the Kovacs Financial Group coming to you with an educational economic update for October 2016. In this month's video, we'll discuss some of the events that influenced the markets in September and help you understand what they can mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. While the third quarter ended in volatility for the U.S. financial markets, after a sleepy summer with historically low volatility, markets became more turbulent in September. So let's talk about some of the headlines that drove market movements just this last month. The Federal Reserve was again the source of much speculation. The central bank met in September to vote on interest rate policy and decided not to raise interest rates again. The Fed is in a really tough spot right now because it needs to bring rates higher to avoid overheating the economy. However, central bankers also need to be careful not to raise interest rates too soon or too fast, or they'll risk hurting the economic recovery. The economic data right now looks moderately good, but the Fed does know that there are risks on the horizon. So, question is, what comes next? It's not likely that the Fed will raise rates at the November meeting when the presidential election is still such a political factor. So, that makes the December meeting very important for us. Wall Street thinks that the odds of higher interest rates after December are over 60%. And interest rates have complex effects on the economy, on corporate profits, on the financial markets, and consumer finances, which is why investors care so much about where interest rates are going. Overall, we can expect the Federal Reserve to be a source of market volatility through the end of 2016. The third release of the second quarter economic growth data shows that the economy grew by 1.4% in the second quarter. Now, while the growth is below trend, economists expect to see stronger growth return in the third quarter. Two unofficial projections of gross domestic product, or GDP, show that the economy may have actually grown at 2.2% in the third quarter. However, forecasts have come down steadily in recent weeks, and it is possible that official growth numbers could disappoint investors. So, what can investors expect in the coming weeks? Volatility and more volatility. Markets are grappling with a lot of uncertainty, especially ahead of the November election. We also know that the Federal Reserve wants to raise interest rates this year. On top of that are concerns about oil prices and Britain's exit from the European Union. Overall, we can expect markets to remain uncertain until these important questions are finally resolved. As always, here at the Kovacs Financial Group, we'll keep you informed. That is it for this month's Educational Economic Update. Here are some upcoming events that we'd like you to know about. On Monday, October 10th, 2016, 4 o'clock p.m., we'll be holding a webinar. The topic will be, how could the 2016 elections affect your investments? Visit us on the web at www.kovacsfinancialgroup.com for more details or to register for the webinar. Once again, this is Jesse Kovacs with the Kovacs Financial Group, signing off for the month of October 2016. I hope you found this video, our first, very valuable. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at the office at 732-306-8100. We'd be happy to talk to you. Have a great day.